Usually when we talk about a medical diagnosis, there's this underlying expectation of precision, right? It's almost like engineering.
Right. Yeah. Like it's a math problem.
Exactly. You
Yeah.
fall, you break your arm, they print out the x-ray, and there's this jagged white line right on the film. The doctor points at it and just says, there's the problem.
Because it's entirely binary. The bone is broken or it isn't.
Yeah. And there's a real comfort in that. I mean, we fundamentally like things to be visible to us. We like really clear categories.
Mhm.
But the moment you step out of a hospital and you step into the world of national statistics,
No, that's a whole different game.
it really is. When you try to diagnose the development of 50 million human beings over 3 decades, that X-ray machine just completely shatters. The diagnostic landscape we are looking at with you today is honestly, it's completely murky. It is full of shadows, overlapping conditions, and signals that just directly contradict each other.
It is the absolute definition of diagnostic muddy waters. Because when you evaluate the health, the wealth, and the education of an entire nation over 30 years, that simple binary of broken or not broken falls apart immediately.
Right.
Because what the data actually reveals is that a country can be rapidly healing and deeply fracturing at the exact same time.
And that paradox is exactly why we are pulling the specific stack of sources for you today. Welcome to the deep dive. We are looking at a massive, incredibly comprehensive data set covering 30 years of human development in Kenya. So from 1990 all the way to 2023.
Yeah, we're not just looking at a snapshot here. We're looking at a 3-decade longitudinal study of a nation's pulse.
Exactly. And right at the center of this data is just a glaring contradiction. So to see it, I want you to picture a wall with 2 giant charts sitting side by side.
Okay.
On the left wall, you have line graph. And this line is just rocketing upwards. I mean, it's the kind of chart any policymaker would frame and put on their desk. It tracks Kenya's overall Human Development Index, or HDI.
And just to clarify for everyone, that HDI score measures 3 things, right? A long and healthy life, access to knowledge, and a decent standard of living.
Right. And from 1990 to 2023, this score has grown by nearly 30%. It started at a baseline of 0.45 back in 1990, and it has climbed to 0.62.
Which is, I mean, a 30% increase in a composite index of that scale is a monumental demographic achievement.
Yeah.
You were talking about millions of people living longer, spending way more years in school, and generating significantly more economic value.
Exactly. It's a complete triumph. But then, you turn your head to the right wall, and on this wall is a bar chart showing Kenya's global ranking among all the nations of the world.
Right.
And unlike the rocket ship on the left wall, this chart is practically frozen in ice. Despite 30 years of climbing, despite a 30% increase in their absolute score, Kenya is sitting at 143rd in the world in 2023.
Still at 143rd.
Yeah. Okay, let's unpack this. How do you run 30% faster but stay in the exact same place in the race?
That is the quintessential Kenya contradiction. And honestly, it forces us to fundamentally question whether our global measuring sticks are calibrated correctly or if we're just completely ignoring the invisible weights tied around this runner's ankles.
Right.
To really understand it, our mission today is to pull apart the layers of this data. We need to look at health, education, wealth, gender, the environment, all to find out what forces are pushing them forward and what invisible anchors are dragging them down.
So let's dive right in. Let's start by looking closely at that rocket ship on the left wall. We need to trace the actual climb. Because, when you say a 30% increase, it sounds super smooth. It sounds like this perfect, straight, diagonal line.
Oh, but it rarely is.
Right. When you actually look at the data points year by year, it's anything but smooth. It's an absolute grind.
It is a profound grind.
Hmm.
If we look at the 1990s, the progress is agonizingly slow.
Mm-hmm.
Like you said, they start at 0.45 in 1990, and by the end of the decade, in 1999, they haven't even cracked the 0.5 mark. Yeah, they're sitting at 0.499. That entire decade is characterized by just a brutal struggle to maintain basic momentum.
But then something shifts, right? I'm looking at the curve right around 2004.
Yes, 2004 is really the inflection point here. That is when the score finally crosses 0.526. And from there, the angle of the line graph gets visibly steeper. You see this relentless compounding momentum taking hold.
It's like they finally hit their stride.
Exactly. They hit 0.55 by 2010, they crossed 0.58 by 2015, and right before the world completely changed in 2019, they reach 0.611. It's basically a 15-year period of almost uninterrupted stair-step acceleration.
Right up until the invisible hand of the global pandemic reaches out and just smacks the line graph back down.
Yeah, 2020.
Because in 2020, the score actually falls. It drops from 0.611 back down to exactly 0.600, and it stays depressed through 2021. Now, I look at a drop of, roughly 0.01 on a piece of paper, and my initial instinct is to think, okay, well, that's a rounding error. That's a tiny fluctuation.
It looks microscopic on a spreadsheet, sure, but you have to translate that decimal back into human reality.
How so?
Well, in the context of national development metrics, progress is usually measured in thousandths of a point per year. It takes massive, coordinated societal effort to move the needle even a fraction.
Oh, I see.
So when you see a sudden sheer drop of a full hundredth of a point, you are looking at a massive societal trauma. That decimal represents hospital wards overflowing, schools locking their doors for months, informal markets shutting down, and just thousands of small businesses evaporating. It is a violent structural shock.
Which honestly makes the very next data point incredibly surprising to me. Because in a lot of global data from the pandemic, you see these permanent structural breaks. Countries take the hit in 2020, and they just sort of flatline.
They never quite recover the same momentum.
Right. They don't recover their previous trajectory, but Kenya's data doesn't do that at all. By 2022, they don't just recover to their 2019 levels, they actually shoot past them.
Yeah, they hit 0.626.
Exactly. And by 2023, they are sitting just shy of 0.63 or 0.62 to be exact on the main index.
It demonstrates a profound underlying demographic resilience. The engine of their development, which we will break down shortly, was robust enough to absorb a once-in-a-century global macroeconomic and biological shock, stall for exactly 2 years, and then immediately fire back up and resume its upward trajectory.
So the boulder is successfully being pushed up the hill. The 30% growth is real, it's tangible, and it survived a global crisis. But that brings us right back to the frozen chart on the right wall, the treadmill. Why are they stuck at 143rd?
Well, because development is a relative metric. To understand the ranking, we have to look at the rest of the runners in the race.
Yeah.
In 2023, while Kenya sits at 0.62, the global average HDI score is 0.756.
Okay, so if you map this out for yourself, it's like watching two runners on a track. Kenya is standing at a marker labeled 0.62, but way further down the track, this massive distance ahead of them is the world average at 0.756.
Well, that is an absolute gap of roughly 0.12.
And in the context of these HDI metrics, a gap of 0.112 isn't just a few steps, is it?
Not at all. It is an entirely different reality of living. It is the difference between an economy struggling to provide universal basic infrastructure and an economy with highly formalized, advanced, technology-driven sectors.
Wow.
And the really cruel reality of the global treadmill is that the rest of the world wasn't just standing perfectly still while Kenya was running. If you pull the historical data, the world average score 30 years ago in 1990 was roughly 0.60.
Wait, stop there. The world average 30 years ago was 0.60.
Yeah.
And Kenya's score today is 0.62.
Oh, man.
It's like being the mayor of a growing city, right? You spend 30 years painstakingly pulling up all the dirt roads, laying down asphalt, and building this incredible modern highway system.
Yeah, a massive achievement.
You look at your city and you've achieved a genuine 30% improvement. You are incredibly proud. But then you look up at the sky and you realize that while you were building highways, the rest of the world just invented commercial air travel.
That is the perfect mechanical analogy for what is happening here. Kenya is currently hitting the global average speed of 3 decades ago.
That is wild.
They are running incredibly fast, but they are running on a global treadmill that is constantly, exponentially accelerating. The baseline for what the world considers average has just shifted radically.
And that gap, that massive absolute distance between Kenya and the modern commercial airplanes, it isn't just abstract math on a page. It's built out of physical realities. It's built out of health, and it's built out of education.
Definitely.
If we want to understand why that gap exists, we have to look at the actual pillars holding up that score. So let's start with the most foundational metric of human existence, life expectancy.
Right, because if you aren't alive, you can't go to school, you can't build a business, and you certainly can't contribute to the economy.
Exactly. And the story of Kenya's life expectancy over these 3 decades it's profoundly moving, honestly. It's not a story of steady growth. It is a story of a society encountering and eventually overcoming a massive existential threat.
It really is. If we go back to 1990, the life expectancy was about 58 years. But as you move into the early 90s, the line doesn't go up. It actually ticks backward.
Yeah, year after grueling year.
By 1993, it drops to around 56.6. By 1995, it's down to 55.8. And then we hit the absolute crater in the data. In 1997, life expectancy in Kenya plummeted to just 55.47 years.
I really want to pause on that number for a second because it's so easy to just hear 55 and let it wash over you. But think about the mechanics of a society where the average life expectancy is 55 and a half years. What does that actually look like on the ground?
It means a massive portion of your population is dying in what should be their prime economic and social years.
Right. You are losing your elders before they even become elders. You are losing your most experienced teachers, your master tradespeople, the managers in your businesses.
You're losing the community leaders who hold the social fabric together.
Exactly. If the average person isn't living to see their grandchildren grow up, it completely fractures the family structure. You suddenly have a generation of 20-somethings who aren't just trying to start their own careers, they're suddenly responsible for raising their younger siblings and taking care of a sick generation above them.
And that is exactly what was happening.
No.
While the raw HDI index data we are looking at doesn't explicitly name the medical cause, the historical context is undeniable here. Any demographer looking at sub-Saharan Africa in the mid to late 1990s knows exactly what that crater represents.
The HIV/AIDS epidemic?
Yes, the devastating impact of the HIV/AIDS epidemic, combined with other infectious diseases, just ripping through a fragile public health infrastructure. A drop of nearly 3 full years in life expectancy over a single decade it's a demographic earthquake.
Yeah.
It hollows out the workforce and places an unimaginable burden on the healthcare system.
But the defining characteristic of this entire data set is what happens next, because just as we saw with their bounce back from the 2020 pandemic, the society refuses to flatline.
The recovery is slow at first, but it is relentless. By the year 2000, they crawl back up. By 2005, through massive public health interventions, better antiviral distributions, and community education, they start making real ground.
It's incredible.
By 2010, they break the 60-year mark, and the climb just continues, despite a minor hit during the recent pandemic. The 2023 data shows a life expectancy of 63.646 years.
From a low of 55.47 to almost 64. That is roughly an 8-year gain. That means, on average, every single citizen has gained 8 more years of life.
8 more years to earn an income, to spend with their families, to build their communities.
It is a stunning victory for public health. But I know there's a but coming because we have to go back to the global treadmill. An 8-year gain is massive, but is it enough to close the gap?
It isn't, and this is where the math becomes very sobering. In 2023, while Kenya celebrates reaching 63.6 years, the global average life expectancy is 73.33 years.
Wow, that is almost a 10-year gap, a full decade.
Yes. Despite overcoming the horrific shadow of disease from the 1990s, a child born in Kenya today is statistically expected to live nearly a decade less than the average global citizen.
That's rough.
And if we're asking why their global ranking is stagnant, this is a massive piece of the puzzle. You cannot mathematically catch up to the global economic average if your citizens have 10 fewer years to participate in the economy.
Because 10 years is an entire career phase.
Exactly. It's the phase where workers typically reach their maximum earning potential. It's where they save for the next generation, where they start businesses. If your population is consistently losing that final decade of compounding wealth and knowledge, your national score is going to be structurally anchored down.
That is incredibly stark, the compounding loss of that decade. But you mentioned knowledge, and that is actually the perfect pivot. Because if health is the shadow in this data set, education is undeniably the brightest light.
Absolutely.
If you look at the accumulation of knowledge over these 30 years, the growth isn't just steady, it's explosive.
It is the great success story of the region. The data tracks education in 2 specific ways, right? Expected years of schooling, which is a projection of how many years a child entering the system today will receive, and mean years of schooling, which looks at the adult population and measures the actual stock of knowledge they already possess.
So let's look at the kids first. In 1990, a child starting school in Kenya could expect to get about 7.74 years of education. Mechanically, that means they've finished primary school, maybe start a year of secondary school, and then they drop out.
Right. They go to work in the fields or they find informal labor.
But look at the 2023 number. It has massively grown to 11.474 years, almost 11 and a half years. The societal expectation has completely shifted from dropping out after primary school to nearly finishing high school.
And the impact of that shift becomes visibly profound when you look at the adults. The mean years of schooling. In 1990, the average Kenyan adult had roughly 3.3 years of education. Some data points suggest closer to 3.8, but it's very low.
I want to push on that. What does 3-point-something years actually mean in practice for a society?
In practice, 3 years of primary education barely guarantees functional literacy. It means a significant portion of your adult workforce cannot comfortably read a complex document, they cannot perform intermediate mathematics, and they are entirely locked out of the formal knowledge-based economy.
But by 2023, that number has skyrocketed. The average adult now has 8.625 years of schooling. It has more than doubled.
It's a huge shift.
Now, quick side note for anyone looking directly at the raw data at home. You might notice a weird zigzag around the year 2010. The number drops from 6.3 down to around 5.2, and then suddenly jumps back over 6.06 by 2011.
Yeah, that always confuses people.
We looked into this, and it's not a case of millions of people suddenly forgetting how to read for 12 months. It's just a statistical adjustment in how the survey data was gathered.
Right.
But if you zoom out and look at the macro trend from 1990 to 2023, the trajectory is undeniable. Going from around 3 years to over 8.6 years changes the fundamental capability of a nation.
It transforms the labor market entirely. An adult with nearly 9 years of education can read agricultural contracts, they could use mobile banking applications, they can understand complex public health directives.
They can transition from subsistence farming into light manufacturing.
Exactly, or the service sector. The sheer volume of human capital that has been injected into the Kenyan economy over the last 30 years is staggering.
Which brings me to the absolute core of our paradox. I am looking at this data and I am deeply confused.
Okay, wait on me.
You have a population that fought its way back from a horrific epidemic to live 8 years longer. You have a population that has more than doubled its time in the classroom. They are significantly healthier and they are vastly more educated.
Yes.
So what does this all mean? If you have a population that is living almost a decade longer and spending twice as much time in school, why aren't they skyrocketing up the global wealth rankings? If you build the human capital, shouldn't the financial capital automatically follow?
It is the most logical assumption to make. But when we transition to the third pillar of the data, the economic reality, we hit a brick wall. We find the income challenge.
Let's talk about the cash. The metric here is gross national income, or GNI, per capita. And it's adjusted for purchasing power parity, right?
Correct. So it's not just a raw currency exchange. It accounts for what the money can actually buy locally.
If we trace the historical data, Kenya's average income hit a low of around $3,589 in 1993. Over the subsequent 3 decades, through all that education and health recovery, they managed to grow that income to $5,608 by 2023.
Okay, growing from roughly $3,600 to $5,600. That is real growth. That's a significant percentage increase in the standard of living.
It is. But we have to go back to our treadmill. We have to look at the commercial airplanes flying overhead. While Kenya grew its average income to $5,608, the global average income in 2023 is $20,327.
Wow.
Yeah, that is a chasm. Kenya's average income is only 27.6% of the world average, just slightly more than a quarter.
And this answers your confusion. You can have a population that is living longer and receiving twice as much education, but they are trying to accumulate wealth in a global system where the goalposts are moving at light speed.
Right.
Over the last 30 years, the global north didn't just grow linearly. They experienced the digital revolution, the financialization of global markets, and massive compounding capital accumulation. A developing nation's steady, linear economic growth is completely dwarfed by the exponential wealth creation happening at the top of the global order.
But wait, I have to push back here, because we are talking about average income. And if there is one thing that always sets off alarm bells when I'm looking at national statistics, it's an average.
Oh, absolutely.
If we are in a room and I have $1 and you have $1 million, our average wealth is $500,000, but I am still starving. An average can completely obscure the reality on the ground.
What's fascinating here is how averages hide the truth. And the statisticians know that, so they created a specific metric to expose it. It's called the Inequality Adjusted HDI, or IHDI. It measures the development that is essentially stolen by unequal distribution.
I want to visualize how this works mechanically for you listening. Instead of just looking at a number, imagine a funnel or a leaky bucket. You pour Kenya's hard-won HDI score of 0.62 into the top of this bucket.
Right.
But the bucket has holes in it, representing inequality. By the time the water reaches the bottom, when you adjust Kenya's score for the actual inequality existing within the country, it drains down to an IHDI of 0.456.
That is a staggering drop. We calculate this as an overall loss percentage.
Mm.
The inequality in Kenya results in a massive overall loss of 27.4%.
Just gone.
Just gone. And to put that in perspective, the global average loss due to inequality is 21.9%.
Yeah.
Kenya is losing significantly more of its potential than the rest of the world. Inequality is literally stealing a quarter of the nation's progress.
It's like working a 40-hour week, but on Friday, somebody takes 11 hours of your paycheck and just burns it.
Exactly.
So where are these holes in the bucket? Where is the inequality the worst? Because the data breaks us down into three distinct areas, right? A radar chart of education, health, and income.
Yeah, if we look at the breakdown, education equality sits at 19.7%. This means there is a disparity in who gets to stay in school, likely split between urban centers and rural farming communities,
Yeah.
but it's actually the lowest inequality of the three.
Okay, what's next?
Next is life expectancy inequality, which sits at 20.9%. This means that while the average life expectancy is 63.6, there are distinct populations dying much younger, while wealthier populations live much longer.
But then you look at the third one, the income inequality.
The income inequality is the most severe pain point in the entire Kenyan dataset. The inequality coefficient for income is a massive 39.6%.
Almost 40% inequality in how income is distributed. That is the giant hole in the bottom of the bucket. How does that actually work mechanically? Why is the income gap so extreme?
It's the reality of a dual economy. On one hand, you have Nairobi, which is a massive, highly connected technological and financial hub. You have citizens working in formal corporate jobs, engaged in global trade, utilizing advanced mobile banking systems like M-Pesa. They are generating and capturing significant wealth.
Right, the formal sector.
But on the other hand, a massive portion of the population is still engaged in the informal economy or subsistence agriculture. They might have 8 years of education now, but if the only job available is selling goods in an informal street market where prices never rise, or farming a small plot of land vulnerable to drought, their income is permanently capped.
Yeah.
The formal sector races ahead, and the informal sector stagnates, creating a 40% chasm in wealth distribution.
So basically, extreme wealth distribution gaps are the primary roadblock preventing Kenya from entering the high human development tier. You can build all the schools and clinics you want, but if nearly 40% of the economic gains are being captured by a fraction of the population, the average citizen is going to feel stuck in the mud. The national rank will remain frozen at 123.
And this massive inequality doesn't just split along urban and rural lines. It intersects deeply with biological and demographic realities, most notably with gender.
Right.
Which brings us to perhaps the most complex, paradoxical, and urgent section of this entire deep dive.
Let's transition into the gender data because the contrast here is wild. It is a story of women breaking massive glass ceilings in public life, but then hitting brutal biological brick walls in private life.
It's a really stark contrast.
Let's start with the baseline gap using the Gender Development Index, or GDI. When you split the overall development score by gender, the female HDI is 0.610, the male HDI is higher at 0.646, the ratio between them is 0.944.
And based on that ratio, Kenya is placed in GDI Group 3, which indicates a medium to large disparity.
Yeah.
That means there is a significant structural gap in how men and women experience health, education, and economic command.
But here's the paradox. If you only looked at representation, if you only looked at the public sphere, you would think Kenya was a global leader in gender equity. The political and economic wins are massive.
Oh, they are huge.
Let's look at the share of parliament seats held by women. In 1990, it was a mere 2.97%. Women were essentially locked entirely out of the legislative process, but over the last 30 years, that number has skyrocketed. By 2023, women hold 24.57% of the seats in parliament.
That is an almost tenfold increase in political representation. That isn't just a statistical bump. That is a cultural revolution.
And that empowerment extends directly into the labor market. If we look at the labor force participation rate for 2023, women are at 62.2%, while men are at 72.37%. Yes, there is a 10-point gap, but a 62% participation rate is incredibly robust.
Absolutely. It means the vast majority of adult women in Kenya are highly active in the workforce. They are holding down jobs, they are generating income, they are visibly present in the public economic sphere.
Okay, so I am looking at this and I have to stop you. Here's where it gets really interesting, or honestly, really urgent. Women hold a quarter of the parliament seats. They are massively integrated into the labor force. They're getting educated. So why, when I look at the Gender Inequality Index, the GII, which ranks how unequal a country is for women, why is Kenya ranked a devastating 143rd in the world? How can you have that much political and economic empowerment but still be ranked so low? It feels entirely contradictory.
Because political seats and jobs are only two dimensions of a woman's reality. The Gender Inequality Index also measures reproductive health. And this is where we hit the biological red line. This is the structural wall.
Okay.
When you look at the maternal mortality ratio, or MMR, the metric tracking how many women die from pregnancy-related causes per 100,000 live births, the numbers are harrowing.
What are we looking at?
Well, the global average maternal mortality rate is 216 deaths per 100,000 births.
216 globally.
Kenya's maternal mortality rate is 529.96.
Almost 530. Let that sink in. That is 2.45 times higher than the global average. You are basically 2.5 times more likely to die giving birth in Kenya than the average woman on Earth.
And you have to compound that horrific risk with the adolescent birth rate, which measures births per 1,000 women ages 15 to 19. The world average is 39.0. Kenya's adolescent birth rate is 56.31.
So you have a significantly higher rate of teenagers getting pregnant, and they are entering a healthcare system where the risk of maternal death is 2.5 times the global average. We need to explore the why here. Why is that mortality rate so high? Because it's not just a number on a page, it's a logistical failure.
It is a failure of rural healthcare infrastructure and emergency response. If a woman in a rural farming community goes into complicated labor, the mechanics of survival are incredibly difficult. The roads might be unpaved. The nearest clinic capable of performing an emergency cesarean section might be 20 miles away.
And there's probably no ambulance to get her there.
Exactly. There is likely no ambulance system to transport her. And even if she does reach the clinic, they may not have a stocked blood bank to handle a hemorrhage.
This raises what might be the most critical question in this entire analysis. Can you truly have gender equity without healthcare equity?
The data answers that clearly. No. You can give women political seats and jobs, you can legislate quotas, you can celebrate a 24.5% parliament representation. But if the fundamental healthcare system poses a lethal threat during the basic biological process of childbirth, true gender equity is structurally impossible.
A woman cannot leverage her 8 years of education or her political voice if she doesn't survive her 20s.
Exactly. That massive maternal mortality rate is a physical anchor dragging down every other empowerment metric. It is the harshest constraint on Kenya's development.
And it reframes how we think about inequality entirely. We spent the last section talking about inequality as this abstract economic concept, the 40% income gap, the dual economy. But maternal mortality is inequality written in biology. It is a physical life or death consequence of uneven development.
It's visceral.
And this realization that physical biological realities are the true constraints on development is the perfect bridge to our next section. Because if maternal mortality is a physical wall, it forces us to ask, what other physical walls are keeping people trapped? We need to talk about poverty.
But we have to stop thinking about it exclusively in terms of dollars and cents. The data uses a tool called the Multidimensional Poverty Index, or MPI.
Right.
The MPI is crucial because it acknowledges that poverty is a lived experience, not just an empty bank account. It measures the overlapping physical deprivations that a household suffers simultaneously. It asks, does this family lack clean water? Do they lack electricity? Are they breathing in toxic smoke? Are they malnourished?
Let's look at the depth of this in Kenya. The 2022 MPI data shows a poverty headcount of 25.4%. That means a quarter of the entire population is living in this state of multidimensional poverty.
But the really eye-opening part of this data is a breakdown of what actually causes this poverty. They map out the specific deprivations in a pie chart. If poverty were just about a lack of cash, you wouldn't need this map.
Right, but look at the biggest factor on that chart. The largest single contributor to multidimensional poverty in Kenya is not a lack of assets or a lack of schooling, it is nutrition. Nutrition accounts for a massive 23.0% of the entire poverty burden.
Almost a quarter of the experience of poverty in Kenya is driven purely by the inability to secure adequate nutritious calories.
I want to push on the mechanics of that, because this completely shifts the paradigm for me. Poverty here isn't just about not being able to afford a smartphone or a bicycle or not having a paycheck. It is a physical deficit. It is a deficit of the actual calories needed to build a life.
Exactly. If a child is experiencing a nutritional deficit, their cognitive development is stunted. meaning those 8.6 years of schooling won't yield the same educational outcome.
Right.
If an adult worker is operating on a calorie deficit, their physical productivity drops, meaning their income drops. Nutritional poverty creates a biological ceiling on human potential.
And look at the other major factors in this poverty index pie chart. Cooking fuel accounts for 12.1%. Housing and electricity both follow at around 10.7% each. Let's talk about the cooking fuel, because 12.1% is a huge chunk of the poverty experience. What does that actually mean?
It means relying on solid biomass wood, charcoal, or agricultural waste, and burning it indoors to cook meals. The mechanics of this are devastating. It creates severe indoor air pollution. Women and children, who typically spend the most time near the cooking fire, are chronically inhaling toxic smoke.
Which ties directly back to everything we've talked about. The respiratory diseases caused by that smoke inhalation are exactly why the overall life expectancy struggles to catch up to the global average. It's why maternal and infant health is so vulnerable. The poverty traps are completely intertwined with the health metrics.
They feed into each other.
Yeah. If a policymaker wants to move that overall development score from 0.62 up to the global average of 0.75, they can't just try to boost the average income, especially not when 40% of the income gets captured by the elite. They have to attack the physical deficits, they have to fix the caloric intake and get the charcoal smoke out of the houses.
The muddy waters are starting to clear up. When you look at the macro data, you see the climb, you see the treadmill, you see the massive toll booths of inequality, the biological red lines of maternal health, and the physical constraints of multidimensional poverty.
If we stop right here, it's an incredibly sobering picture. It's a story of a nation fighting with incredible resilience against massive, interconnected, systemic headwinds. But we are not stopping here.
Oh, definitely not.
Because buried at the very end of this massive stack of sources is a twist. It is the green ace up the sleeve. Up until this point, we've been talking about Kenya struggling to catch up to the West. But in this final layer of data, Kenya stops chasing the world. In fact, the world might need to start chasing Kenya.
We are looking at a revolutionary new metric called the Planetary Pressures Adjusted HDI, or PHDI. For decades, global development was measured by a very selfish standard. The metrics only asked what a country extracted for its own benefit, how much wealth it generated, how long its people lived.
Right.
But it completely ignored the cost of that development to the planet. It didn't account for the ecological debt. This new metric adjusts a nation's development score by penalizing them for their carbon dioxide emissions and their material footprint.
It penalizes the gas-guzzling, heavy-extracting, high-pollution economies. So let's ask the question, if Kenya is trailing the world in average income, where are they leading the world?
Here is the shocker in the data. When you take the global average development score and adjust it for ecological footprint, the world score drops by a massive 10.05%. The developed world is heavily penalized because their modern infrastructure and high incomes are ecologically incredibly expensive. They are burning the planet to maintain their wealth.
But when you adjust Kenya's score for planetary pressures, it only suffers a tiny, almost negligible loss of 2.7%.
The contrast is phenomenal. A 10.05% global penalty versus a 2.7% penalty for Kenya. And the mechanics of why this happens become obvious when you look at the raw per capita CO2 emissions data.
Give me the numbers.
In 2023, the global average for carbon dioxide emissions is 4.536 tons per person. Kenya emits just 0.391 tons per person.
0.391 tons versus 4.536 tons. The average global citizen emits more than 11 times the carbon of a Kenyan citizen. I want to drill down into how they are actually doing this, because it's easy to assume, well, their income is lower, so of course they emit less. But they've grown their development score by nearly 30%. They've doubled their time in school. They've added 8 years of life expectancy. They're building infrastructure. How are they achieving that massive growth with such a light footprint on the planet?
They are essentially bypassing the 20th century coal-fired industrial phase that defined Western development. If you look at Kenya's energy grid, a massive percentage of their electricity is generated from renewable sources. They've tapped heavily into geothermal energy in the Rift Valley, alongside significant wind and hydropower. They are building a modern, digitized economy without the massive ecological debt that the West incurred.
They are proving that you don't need to burn a mountain of coal to double your population's time in school. And this has a direct, massive impact on those stagnant rankings we talked about at the very beginning of this deep dive. Remember that frozen bar chart? Rank 143rd in the world.
Yep.
If the global ranking system suddenly decided that ecological survival was the most important metric, if we ranked countries by this green adjusted score instead of the traditional carbon blind score, Kenya would instantly jump up 8 spots in the world rankings.
If we connect this to the bigger picture, it completely exposes the hypocrisy of the traditional global treadmill. The standard metrics punish Kenya for not having Western levels of wealth, but those same metrics conveniently ignore that Western wealth was historically purchased with an unsustainable carbon debt.
Exactly.
In the 21st century defined by the climate crisis, the ability to generate a 30% surge in human development with only a 2.7% planetary pressure loss is a massive strategic advantage. It positions Kenya as a global leader for green finance, for carbon credit markets, and as a paradigm for sustainable investment.
Which brings us to the end of our deep dive. We've laid out all the puzzle pieces, we've looked at the X-ray, we've found the broken bones, and we found the surprisingly strong muscles. Now we need to synthesize all of this data into a strategy for the future. Based on these 30 years of numbers, what does Kenya's next act look like? How do they move from just catching up on the global treadmill to actually surpassing?
We can summarize the data into a trident model for Kenya's next act, a three-pronged strategy.
Let's hear it. First prong, reduce the leak. The data is screaming that the 27.4% inequality loss is mathematically unsustainable. They cannot enter the high human development tier while nearly 40% of their income distribution is skewed toward a narrow elite. They have to patch that massive leap and bridge the gap between the formal tech hubs and the informal agricultural sectors.
Second prong, shore up the vulnerabilities. The generalized health metrics are improving rapidly, but they have to attack the specific biological and systemic red lines. They had to aggressively expand rural emergency obstetric care to slash that maternal mortality rate of 529.96. And they have to conquer the physical nutritional poverty revealed by the multidimensional poverty index. You simply cannot build a modern, highly productive economy on an undernourished foundation.
And the third prong, leverage the green advantage. Capitalize entirely on that incredibly low 2.7% planetary pressure loss. Don't let anyone tell you to copy the 20th century carbon-heavy industrial model. Use this light footprint as a geopolitical weapon. Become the absolute paradigm for green finance and sustainable growth, and force the world to invest in it.
It is a formidable set of challenges, for sure. But the sheer demographic resilience shown in bouncing back from the 1990s health crises and the 2020 pandemic proves that the underlying momentum is real. The 30% growth is not a fluke. The foundation is built. Now it is about structural refinement.
I want to leave you with a final thought to mull over as you go about your day. For decades, the narrative in global economics has been a one-way street. The assumption has always been that developing nations must desperately try to mimic the West. They must try to copy the high-carbon wealth, the sprawling infrastructure, and the massive consumption patterns of the global North. That is what the global treadmill is built on.
Right.
But looking at these planetary pressure numbers, looking at a developed world that is suffocating under a 10.05% ecological penalty, while Kenya sits at a sustainable 2.7%. What if the script is flipping? What if the 21st century requires the West to look at that chart on the left wall? What if the developed world needs to learn from Kenya's ability to generate human development, to bounce back from crises, and to build resilience without destroying the environment in the process?
It's a really profound question.
Maybe the true paradox isn't why Kenya's rank is stagnant. Maybe the paradox is why the rest of the world is still running on a treadmill that is actively burning the gym down. Thank you for joining us, for following the data, and for taking this deep dive.